All right. So, folks, welcome to this afternoon's presentation, Trading in the Zone. I've named it mentally and technically. And recently here, it seems to be more mentally that we have to stay in the zone as this market is very volatile. And we're getting a lot of wide swings and things, and keeping people on the safe edge, if you will, uh, in the marketplace, very important. Disclaimer, as usual, trading and investing can result in large losses and may not be the activity suitable for everyone. Again, this is more of an educational venue tonight, and just want to make sure that you all understand that this is not a recommendation. There's no solicitations here this afternoon. Here's some of today's topics that I want to discuss. First one is going to be head games, things that mentally stop you. We'll talk about those things that may stop you from entering a trade and some things that may stop you from doing your job that you're supposed to do every day. We're going to look at market profile basics and defining the zone. What exactly is the zone when we talk about market profile? And I'll try to instill that into some English, if you will, or some simpler format. And the importance of value. Why is value important? And have a plan, and we're going to stick to it. Right, stick to it. Right place at the right time, and some of the same things here. Again, the importance of volume structure. So keeping your head in the game. I don't know about you, but these last few weeks, and ever since Uncle Ben spoke a few weeks ago and made new highs in the market, you'll notice that the market has been making some really big swings. And those big swings require a lot of consistency, if you will, of knowing where you're supposed to be trading from and just keeping your head in the game, if you will. And I wanted to start out this evening because there's a lot of people I talk to, and there's always issues. When you're coaching people, there always seems to be issues. And one of the things, I've actually listed several of them here, and you'll probably think of your own as we go through this, but things that stop you, meaning things that stop you from maybe taking a trade that you should be taking, or maybe not taking the stop where you should be taking it for whatever reason. It could be, one of mine is not having enough sleep. If I don't get enough sleep, I'm just totally worn out the next morning. I'm not focused. Or the other one about waking up too late, and then not having enough time to prepare for the morning. That could be a recipe for disaster also for your trading day. Family distractions. Maybe you've got kid issues. Maybe you got to run somebody to a dentist appointment right before the market opens, thinking, "Gosh, I just can't do this." Or maybe you had a fight with your spouse. Needing to make money. That's probably one of the big ones that keep people from staying focused mentally and emotionally in the marketplace, is because when you're forced against the wall to have to produce, you're not going to produce. It never works that way. It's like the market knows you're trading scared, you're on the fence, you're having to force trades, you're having to make money, and then the next thing you know, you're just turning into losing trade after losing trade after losing trade. One of the things here I had to stop was unexpected visitors. I don't answer the phones anymore during the day. I'll take phone calls during the lunchtime hour, but these are all distractions. They're going to cause you to possibly lose focus as to what you're supposed to do. Any distraction that takes you out of the market and causes you to step aside and maybe lose focus are all things that, again, mentally or emotionally will take you out. And again, you can create your own list. I'm sure some of you have already thought of things that keep you maybe out of the zone. I like to say trading is 90% in your head. It really is. Trading is really simple. It's what's between our ears that causes the difficulty. It's our perception of, number one, what may have stopped us from taking a trade, or two, doing what we're supposed to do. The technical aspect of it is real easy. I mean, you can learn all you want and overcomplicate it, if you will. And even in that sense, I've met people that have taken the technicals to a new level where it's total distraction. It still goes back to what's between your head, in between your ears, in your thought process of staying in the zone. So you want to keep your head clear. Keep it clear from things that may be affecting you in your life, maybe struggles, whatever it may be. You want to stay in the game, which is a battle every day. We want to be able to battle the markets, be fresh, renewed every day, and obviously don't we want to battle ourselves, but at times if we're not in the zone, we're going to be battling ourselves. What does it mean to be trading in the zone? Again, just some more of the same things. Things that may stop you. Again, for me, it's a good night's sleep. How about market prep before the open? Not sitting down in front of your computer and doing the things that you're supposed to do in advance. Looking at the levels. Where am I going to go long today? Where am I going to go short? Where is my market perception here? What is the market traded in the overnight session? You want to be calm, relaxed, right? Plan it before you place it, even before the opening bell. And don't fly by the seat of your pants once the market opens. Believe in what you've already figured out. Don't let anybody else distract you from your belief system. You know, I tell people all the time, don't read a lot of stuff. Don't read other people's comments. I see, there's so many things and so many people out on Twitter and things that all it really does is it takes away from your focus and what you're supposed to do as a trader. You have the skill set, so build your own trading plan every day. Don't take somebody else's recommendation for it. So believe in what you do. Don't doubt your plan. And then control the market. I say control the market, and I'm not meaning from a monetary standpoint where we're going to push the market around with large size. What I'm meaning is that when you are in doing what you're supposed to be doing, you're going to have a confidence level, and the market won't control you because you're going to go ahead and you're going to trade from the levels that you're supposed to. The markets will come to you. You'll go ahead and take the trade. If the market isn't coming to your level, then you sit on your hands and you don't take any trade. That's why I said trading is really easy. When you find yourself chasing after it, clicking the mouse or doing things that you shouldn't be doing, then you're obviously not in the zone at that moment. So the success ultimately is what? You clicking the mouse confidently at the areas that you need to click it at. So we've defined kind of those mental things that may keep you out of the market. And again, for everybody, it may be a little bit different of an issue, but those are some of the things that I know that I've ran up against with other people and myself throughout the years that stop us mentally, emotionally. We're not in the zone. You're going to find that when you're not in the zone with your head, you're not going to be in the zone with the markets, and it's going to cause you to stumble and fall, and it's going to cause you to do things that you shouldn't be doing. Let's talk about defining the technical edge. So if we can define the mental aspect of it, we know that there has to be a technical aspect of it too. Now, the right place at the right time, that goes along with letting the market come to you and controlling the market from that aspect of it. Number one, you need a methodology that works, something that you can rely upon, that you know that works through all market conditions, all market environments, and that you believe in it. Something that you understand fully and understand based on the price and volume action in the marketplace. Visual process, look to see where turning points in the market are. Simplicity is a big piece of this. As I said before, 90% of trading is really, it's psychology, if you will. The simplicity of it is just keeping it really simple, not overcomplicating things and putting too many things on your chart. Again, fundamental principles that work. Again, here it is again. Keep your head clear. Keep it simple. Don't overcomplicate it. We've already dealt with the emotional makeup of your mindset. Now let's take and move it to the next level as far as the technical aspect of it. I like this last bullet point. Don't get emotionally married to your trade, right? Don't get married to it. If you're going to get married to it, you're probably on the wrong side of the trade, because a lot of times people get married to something and have a belief system that it's supposed to go the other direction, but yet it's going the other way. And it paralyzes them and stops them from doing the right thing. Let's talk about stages of market activity as we build the technical zone here. Now, we know that there is two stages of market activity, and it's time frame dependent. That's the key word there, time frame dependent. And why is that important to us is because these two concepts of balance and imbalance, which balance is a horizontal development, which is a slow movement, and an imbalance is vertical development, which is normally fast. And you've seen that the last couple of days in the market. Vertical development both directions, and it's fast. There's nothing slow about it. And you'll see here in the next example, when we talk about a balanced market, we're talking about something that is being in a trading range. It's a consolidation phase, if you will. There is enough liquidity within the marketplace for when the buyers come down at the lows or the sellers come in at the highs, that the market can stay constrained in this consolidation range. We call this a balanced market. For a market profile trained trader, this is one of our favorite trading ranges. And again, it's 80% of the time we're trading in balance. The key thing here again is time frame dependency. If you look at the daily chart on the ES right now, E-minis, we're in a balanced market. You have 1685s on the top and you have 16s at the bottom, but it is balanced trade. It's on, again, time frame dependency. So the bulls and bears are evenly matched up within this. and it's occurring in all time frames. So you have demand at the lows and you have supply at the top end of this.